Hey, what's up, my friend? So in this video, I'll be discussing about the harami. So this is what it looks like, right? This candle over here, the second one is a harami. So a harami is simply what I call an inside bar. So this means that the candle is inside the prior candle. So it's actually the opposite of the engulfing pattern actually. So you can see that this candle is inside the first candle. So you can see that the range of this candle is contained by the previous candle. So this is what I mean by harami, otherwise known as an inside bar. So usually when you see harami on your chart, it usually leads to volatility expansion. It does not expand immediately, but it should be so-called like a signal to you that the volatility of the market is contracting. And as you know, volatility in the market, right, is not constant. It moves from volatility contraction to expansion and then back to contraction and then expansion again. So let's have a look at harami on this chart. So let me identify them together with you. So over here, you can see that this is a harami. This candle here is inside the range of this previous candle, and this previous candle is inside the range of this candle. So basically you can see that volatility here is contracting and then it expanded towards the downside. Okay, where else? This is another harami as well. This range of this candle is within this candle, and this candle is within this candle. Okay, so you can see that the candle of the body are basically shrinking. So it's telling you that the volatility of the market is contracting. This is another harami, although it's not very small, but it's still being covered by this previous candle. Okay, let's see. No. How about this one? This is a harami. You can see that this candle is being covered by this previous candle and this one as well. Okay, so by now I think you should be familiar with what is a harami, and the implication of this is that it's telling you that the market is going through or possibly going through a volatility contraction, and you can expect volatility to expand or pick up, right, if the price does break out of any significant level. So here's a quick recap to the harami, right? It's basically an inside bar with sometimes the range can be small and sometimes it can be large, as what you've seen earlier. And usually it's a sign that the market could be going through a volatility contraction, and you would tend to expect volatility to expand in the near future, and it usually expands or break out in the direction of this prevailing trend, or rather the previous momentum that led to the volatility contraction. Okay, so with that said, I have come to the end of this video, and I'll see you in the next.